Now, time for the word on Wall Street. Top investors watching your money this morning. Joining me right now is MJP Wealth Advisors President Brian Bendig, Bulltech Capital Markets Chief Strategist Kathryn Rooney Vera, and Michael Lee Strategy Founder Michael Lee. Kathryn, let me move on to inflation because oil prices reaching multi-year highs, up 40+%. Global supply tightens and fuel demand in the United States prices ever so higher. And it's not just crude, as you know. The Journal is reporting that the price of propane hasn't been this high heading into the winter in a decade. Your thoughts on, the impact and how sustained these price moves may be?
Right now we have the perfect storm, Maria. We have a normalization, of course, in air travel demand, which is probably going to continue, meaning that there's going to be additional air travel, both from a recreation and from a business person perspective. And we have shortages of natural gas and coal. So we also have a collapse in investment and in exploration and production, not just from OPEC, but from the United States. So we have very high demand, a very low supply. My expectation is that that's going to continue to be the case for some time. Over the next back half of next year, we see oil prices decline due to a reversal in several trends. First, I would say investment. We're already seeing energy companies come out and say, we're investing more. Fantastic, we need it. Demand is higher. Inventory accumulation instead of depletion. We've seen depletion so far. Normalization in demand rather than this continued surge in airplane demand. And I would also add production is likely to improve in 2022. I've seen some expectations of U.S. oil production just on our side, Maria, going from 11.3 million right now, going down to 11 million barrels per day this year, back up to 11.7 million barrels per day in 2022. So I do think we're going to see some easing in the back half of next year, but we're going to continue to see some pain at the pump for the foreseeable future. I would say the next 6 months.
Yeah, and yet, Kathryn, real quick, spending power has been real strong. Do you think this move in prices cuts into willingness or abilities to spend money the way that we have been seeing at such a strong pace?
Yeah, gas prices at the pump serve as a tax, Maria. So as taxes go up, you have less discretionary income. So of course, as prices go up, hitting $4.80 in some places, almost $5 a gallon, that certainly does cut into discretionary spending.
All right, great to see you all this morning. Thanks very much, Brian Bendig, Kathryn Rooney Vera, and Michael Lee. We'll see you soon. Have a great Monday, guys. Thank you.